Hi, I'm Courtney Boudet, and I'm a bookkeeper, an accounting and HR manager, and a small business owner. And my jam is to help small businesses get their QuickBooks Online files set up properly from day one. So today, what we're going to be talking about is the different entity types. Now, how does this relate to bookkeeping? Well, one of the first questions that I ask people is, what is your entity type? All right, so thank you guys so much for being here. Today, I have Brianna Beers, and I think I just said that wrong after we had the whole conversation.
No, you got it right.
Bree.
Brianna Beers. Just call me Bree.
My name is Bree. Okay, and we have Kelly Elrod. And the reason why I brought these two lovely ladies together is because we are going to talk about the entity types that small business owners use and the business structures. This is one of the main questions that all of us get, but also I see it a lot in Facebook groups where it's like, what entity type should I be? And then, asking those questions. So the very first thing that I would like to do is I would like to open it up to Bree and Kelly to let us know a little bit more about their businesses.
Kelly Green Elrod, and thanks so much, Courtney, for inviting me to be on. I own a law firm in Nashville, right outside of Nashville, Tennessee. But I don't want to say most importantly, but a big goal and dream and passion of mine is I own a separate company called Legal Easy, and our website is legaleasyllc.com. And our entire purpose is to take complex legal concepts and make them simple and easy, so that my passion and goal is to help small business owners, small business leaders, entrepreneurs, creators, really learn to think for themselves as far as legal issues go, because I truly believe that if you not just have knowledge, but also have understanding, because it's one thing to just know something to know it, but to actually, if you really understand how something works, and you can think through it, and if you can think through it, then you can make decisions, better decisions, right? And if you make better decisions, you don't get sued. Mm-hmm. So what happens so many times in these, small businesses, solopreneurs, startups, or small businesses that just don't have, massive funds, in reserve, they get sued. And one lawsuit will wipe them out, especially if they are not structured correctly as far as entities, if they don't have proper contracts, if they don't have disclaimers that are appropriate for their business. So that's what we do with Legal Easy, is we help folks just learn basic. Again, it's not law school, even though we are coming out with a digital course called Law School for Entrepreneurs. So it's going to be super fun, but it's definitely specifically geared for entrepreneurs, small businesses, so that they can learn to think for themselves.
Awesome. And Bree.
All right, so pretty much everything Kelly just said about her business, but spin it to tax. And so first of all, I own a CPA firm. We're in Denver, but we deal with clients across the country. Lippa Beers and Associates PC. We specialize in small business tax returns and tax returns for the individuals who own small businesses, as well as more, we have complicated individuals who may not have businesses, but have like other things going on. Mm-hmm. But goal in life is to educate my small business, not just my clients, but like small business owners on money and taxes and getting a grasp on your finances, so that your financials are a tool you use in your business to grow your business and not something you're scared of. And I feel like that is my purpose in life. And I will have, Courtney, there's show notes, right?
Yeah.
So I will have, guys, I have free groups, I have free trainings, I give all this stuff for free because you guys don't know what you don't know. And so my goal is to educate you on what you need help with. And that way you kind of know what direction to go with your money and your taxes and your finances. And the ultimate goal, you guys, from the tax point of view, is to save as much money as you can on your taxes legally. I want to say that, yes. Legally. Uh-huh. Yes. And put that money back into, whether it's put it back into your business, invest it in yourselves via maybe retirement or college or somehow, but keeping that money in your pocket and being able to put it back into yourself and your business. So that's my goal here in life. So
that's awesome. Thank you guys so much for being here. I really appreciate it. So the very first thing that I like to tell people before I do any training is that this is a shame-free zone. I had somebody do the little logo. This is a shame-free zone because as a small business owner, there are times where my clients, myself, other small business owners I talk to, you feel like you should already know something, but most of us didn't go to business school. So Bree and Kelly, they went to school for the knowledge that they're going to tell you. And so do not feel ashamed that you don't know it. You're learning it, you're here, and that's the first step in the process. So thank you for being here. The second thing that I wanted to talk about is that this is not advisement because we don't know you and we don't know your specific business. So the only piece of advisement that actually Kelly just talked about before we started is awesome. It's to actually touch base with your CPA and your attorney in the same meeting and talk about this so that you know that the structure that you are going to choose works best for you, and then you have actual advisement on your specific business. So that is the only advice that we can give that is online, okay? So that has to be said first and foremost. So we'll go into the different structures and we'll hand it over to Kelly so that she can give the legal perspective, and then Bree will just pop in with the tax perspective at the same time. So the main structures that most small business owners utilize are a sole proprietorship, a general partnership, an LLC, and a corporation. So Kelly, can you just take it from here and let us know the legal perspective?
Sure. And along the lines, Lord, I can't talk today, along the lines of disclaimers, I want to say that all entity and corporate business association structure law is always from a state perspective. So the information that I'm giving you is not always going to be true for your particular state. Mm-hmm. There are things called model codes. So like there's a model corporation model corporation act. Same thing with partnerships that are kind of overriding acts or codes, things that have been are used by many states to make their own state-specific code. Mm-hmm. So the information that I'm giving you is information that is used in most states, but may not be used in your state. So just know that all entity and all business structure law is from a state perspective and not from a federal perspective, okay? Yeah. But in most states, if not all, there are the most popular business structures are a sole proprietorship, just like Courtney said, general partnership, LLC, and corporation. There are other structures beyond those. Those are just the most popular. Sole proprietorship and general partnership are almost identical, except for a sole proprietorship is one person, sole, and a partnership has got to have more than one person. So it can have two or how many ever you want in that partnership. Sole proprietorships and general partnerships offer no liability protection. Mm-hmm. So if someone sues your business, so if you've got business ABC, ABC, whatever, not mm-hmm. Whenever you see a comma LLC or a comma Inc., that's an actual entity, and we're going to get into that. But if you're sole proprietorship and you are, Mom's Cupcakes, all right, and you did not register for an LLC, you didn't register for a corporation, it's just you, Mom, you're a sole proprietorship. If it's Mom and Dad's Cupcakes, it's Mom and Dad who own, Mom and Dad's Cupcakes, then someone gets sick eating your cupcake, and they decide to sue Mom and Dad Cupcake, they can sue Mom and Dad's Cupcakes, they can sue Mom individually, and they can sue Dad individually, mm-hmm. which means that all of the company's assets are up for grabs and all of Mom and Dad's personal assets are up for grabs. Therefore, I never recommend continuing a business under a sole proprietorship or a general partnership. Because we have other options that are so much better. The next would be an LLC, and an LLC is a limited liability company. And a limited liability company can be one person or it can be 85. 85 is a number. It can be as many as you want, It's not really 85. Please know that there's not a cap. on that. But the limited liability company is a really, really, really great structure entity from a legal perspective, because it's really easy to set up as far as your state goes. Most states have LLC set up online, where you just go to your Secretary of State's website. Let me also mention that all entities are registered through your Secretary of State. So if you're curious about the entity, LLC, court, other entity structures, if you go to your state's website and search for Secretary of State, it's on their page that you're going to find your entity information, or how to become an entity through your state. But an LLC is going to offer you personal liability protection. Now, I will say in some states, and this is where states really do make a difference, because in some states, if you always have an initial investment, right? And let's say your initial investment was $1,000 into your LLC. Some states will allow you to be liable up to the amount of your investment. So if you invested $1,000, they allow you to be personally liable up to $1,000. Some states allow zero liability for personal liability for an LLC. So that's a differentiation between states. And then the next is a corporation. And a corporation, again, you can be one person and have a corporation. But corporations from a legal standpoint really make sense when it's larger. And I will definitely let Brianna get into all the tax pieces of that. But corporations really allow for, because corporations require directors, a board of directors, they require officers and shareholders. So if you are you've got a company that you really believe you're going to take public, right? So you know that it might have 10 people part of it now, but you know that you're going to take this baby to the stock exchange, and you're going to sell shares. Shares are more easily sold in a corporation than they are in an LLC. Now you can sell shares of a membership shares in an LLC, but it's not as easy, because it's just not set up. It's not a vehicle that's set up for that, whereas corporation is what a corporation is set up for. So there are liability step downs as far as who can be liable within a corporation. But all of them, I should tell you, even within that corporation, are protecting personal liability. So as far as the LLC goes in a corporation, your personal assets are mostly protected. And the one thing I want to say about all of this is that no matter how, what vehicle you're doing, whether it's a corporation or an LLC or anything, there are times when you can be personally liable if you've committed crimes, if there is fraud, if it's really egregious acts.
So it has to be pretty big, and outside of the normal, as long as you're doing everything by the book, and you should be okay.
Think of very large investment companies who have these corporations, and they're investing folks' money, right? They've got fiduciary duties.
Okay.
And they take the money, right?
Yeah.
So they're not protected at that point by that corporation. Okay. They can go straight and take their personal liability because, and of course they've committed a crime there, but beyond that, they're civilly liable personally as well. So it does have to be pretty big. So it's not just someone had a slip and fall. Let's say, for example, you own them like mom and dad's cupcake shop, and someone spilled a drink. You didn't realize your drink was spilled, and someone slipped and fell. You're not personally liable at that point because of that slip and fall in most states.
That was good clarification. Thank you for that. Yeah. Okay, so to recap, a sole proprietorship and a partnership, you personally are legally liable.
Correct, 100%.
Right, and then an LLC and a corporation, the corporation or LLC is legally liable.
Correct. Now, exactly. That is the overriding rainbow.
Okay.
Caveat is not only just egregious circumstances, but in some states, in an LLC, you are also personally liable for your initial investment.
Okay. Perfect. All right. So, Bree,
All right. So before I get into this, and this is like one of my favorite things to talk about, I just want to reiterate like the importance of making sure your CPA and your attorney talk. I think we've all said this already, but I can't tell you how many times I have a client or a new client would come to me, even old clients, be like, oh, hey, I just set up this C Corp, and I'm just like, why? And well, my attorney told me to. And it's like, well, for what, so having, because typically what'll happen is Kelly or your attorney, we're going to use Kelly. Kelly will come up to you and say, okay, we don't want a sole partnership, and so based on you, let's do an LLC, or let's do a corporate. You're going to have choices, right? From a legal point of view, like she's going to give you a few choices. And then you're going to want to take those to your CPA and be like, okay, here's what my attorney said, like what is best from a tax point of view. That said, so much easier if you just get on a call with the two of them. It prevents back and forth. It prevents miscommunication from happening. He said, she said. And honestly, like I talk about in another course that there are three, like when you're a small business owner, there are three people in your business, in your life that you should have, and they should all work together well. And that's your attorney, your CPA, and your financial advisor. So making sure that they all have a connection with one another, so important. So if you have like an attorney and a CPA who don't ever want to communicate, like red flag. Or if you have one that, like if you have a CPA or an attorney who's just like, this is what you want, and does not advise you to go to the other one, take a step back, okay? Or at least ask the question. Be like, well, should I talk to my other person first? Because a lot of times we get into these these professions, and we get a little cocky, right? We think we know everything. And I don't know, but Kelly, I think, is in the same page. I don't know legal. She doesn't know accounting. So we work together to make sure we're not putting you as the client in jeopardy of doing something you don't want to do. And so want to reiterate that. And then, so we're going to talk about there's four tax structures that if you're in a for-profit business that you're going to fall into, one of four buckets. And so there's the sole proprietorship that Kelly talked about. And there's also the single member LLC. So even though those are different legal structures, tax-wise, they're going to be treated the same. The second one is going to be your partnership. The third one, and this is my favorite, is going to be your S Corp. And your fourth is a C Corp. It's important to know, you guys, that like you can be, because I have a question that, comes in and is like, should I be an LLC or an S Corp? Well, technically you can be an LLC taxed as an S Corp. So it's not really a choice. And that's just something that like, and I'm not like making, but like it's something that you need to educate and just kind of educate yourself on, is that there is this huge difference between legal structures and tax structures. I'm using hand gestures and y'all can't see that. So let's just.
Well, we can on the YouTube version.
And just know that, up to a couple of years ago, I didn't know that. From a tax perspective. So just a word to your word on making sure you've got both of those professionals.
Yeah.
We're not taught tax in law school unless you're specifically you're becoming a tax attorney.
Right. Exactly. And that's an exact, perfect. And then the other thing I want to just chat about real quick before I get into these four structures is, so when you set up an entity, you end up getting what's called a tax ID number, an FEIN, an EIN, whatever. Okay. When you're a sole proprietorship, you're using your social, which I hate in itself anyway. Right. So as soon as you set up an LLC or a partnership or a corporation, you're going to get a tax ID number. Pro tip, so when you set up your tax ID number, you have to put in your business name. Go check with your Secretary of State first to make sure your name is available. I can't tell you how many times I've had clients do it backwards, because you think there's no way there's a Brianna Beers LLC out there, and so you get your tax ID number and then you go to register with your Secretary of State and it already exists. And so now you're like, now what? So that's just a pro tip. Register, or it's not even register. You can check the availability of your entity name, your desired entity name, on your Secretary of State website first. Make sure it's available, then get your tax ID number. Okay, just a little bonus tip.
Yeah, totally.
Okay, so now let's talk about the four different tax structures. And within your show notes, you guys, I have what I think is a fantastic little chart that I made. That's probably why I think it's fantastic, because I don't do PowerPoint and Word, like all these fancy things, and I did this by myself. So, but what it goes through all the differences between your four different categories. Okay, so when we think about these, I'm just going to go through them one by one and kind of explain to you what each one does and how they differentiate. So, sorry, I'm getting over this cough. So as Kelly said, so a sole proprietorship or a single member LLC, okay, one owner, okay? And so anytime you set up a business or you just start a business, this is what it's going to default to, your tax structure, if there's only one of you. Okay, so this is where we default to. This is just going to be reported on Schedule C of your individual return of your 1040. So there's no separate return to actually file. It's just a form within your individual return. And then that income is just lumped into your individual income tax, or income. So all of your income that maybe you have W-2 wages and then you have this business. So all of that is lumped into your ordinary income on your individual tax return. And then one thing we are going to talk about is self-employment tax. And this is going to come into play in some of the other entities. So y'all, self-employment tax. Let's start with payroll tax. So when you are a W-2 employee and you get wages, your employer pays half of your FICA, Social Security, Medicare tax, and you as the employee are deducted for half of it as well. Total of those payroll taxes is about 16% of your gross income, your gross wages on your W-2. Well, when you're self-employed, there is no payroll tax. Government still wants their money. So you're subject to what is called self-employment tax. And this is what gets so many clients not in trouble, but getting them owing, because they've been holding out what they think is their income tax, but then they have this extra 16% that ends up due on all of their net income from their business. So knowing that by default, when you default to the sole proprietorship or the single member LLC tax structure, you're gonna have that extra 16% in self-employment tax. So to keep that in mind. Okay, and then the last piece we talk about are distributions. So what a distribution is guys, is when you take money out of your business to pay you're in business to make money to pay for your mortgage and your car and everything. And so when you take money out of your business to pay your personal stuff, that's a distribution. And in this tax structure, those distributions are not taxed. Okay, you're taxed on your net profit, right, from your business, and then you can take that out as you see fit. There's not any sort of double tax or anything like that. So then we move on to a partnership. Very similar to your sole proprietorship or single member LLC, except for a partnership is where you're going to default if you have 2 or more people in your business. And from there, so all of the rest of these entity types are going to have a separate return. They all have a whole second separate return that you're going to have to file. In this case, it's a 1065. But your income from the business is actually still taxed on your individual level. So the business return issues what's called a K-1 to your individual with how much money you made, and then you report that income on your individual return still. So the partnership itself doesn't pay any tax. It's essentially a reporting instrument. So let's say Kelly's a 50% business owner in the partnership and I am, and we made $100,000 net, then the K-1 is going to show my $50,000 and her $50,000. And then we're going to report that on our 1040. Okay. And then this also, if you're a general partner, you're going to be subject to that darn self-employment tax again. So on your share of income and if you receive any guaranteed payments. So you're not escaping that self-employment tax quite yet. And then again, you're not taxed on those distributions from, if you have to take extra money out or any money out from your business, not taxed on that unless you have what's called an excess distribution, which means you take out more than you put in, which does happen, but if you have a good accountant, that shouldn't happen. So then I'm going to jump to C Corp. I'm going to come back to S Corp because S Corp is like the best of both worlds. So I'm going to jump to C Corp. Okay. So a C Corp completely like its own animal. Okay. Whereas these other, these other instruments, these other tax structures, the income flows to your personal return. A C Corp does its own thing. So not only does it have its own tax return, but it pays its own taxes. Okay, so, and it's a flat 21% tax rate right now if you're a C Corp. So on your net profit, 21%. There's no self-employment tax because again, it's its own entity. So if your C Corporation makes $100,000 net, it's just 21% tax. Your officer does have to take a reasonable salary, and we'll talk about that in a minute. But the thing that comes in here is your distributions, which in a C Corp are called dividends, are taxed. And I think you guys have probably heard double taxation. And this is what that means. So your business made $100,000. You paid the 21% tax bracket or tax on that. And then, but let's say you had to take out $20,000. That's a dividend to you personally, and you're going to pay capital tax on that money you take out. So it was taxed at 21% by the business, and then you're going to get taxed again on your personal return. So that's where the term double taxation comes in. And really, from a tax point of view, C Corps are only, I mean, it's similar to what Kelly said, are really only there when you want to like lots and lots of shareholders, go public, maybe a lot of times with C Corps, if you need venture capital, it's just an easier way to do that. But other than that, unless you plan on going big, like C Corps are just not where we like to start our businesses. All right, so now I want to talk about my favorite, and that's an S Corp. So the S Corp was created as kind of a best of both worlds. It takes the best of being these small sole props and partnerships and the best of like C Corps, and it smushes it together. So you can have to be taxed as an S Corp. Remember, you can be an LLC taxed as an S Corp. Or so to get that S Corp election, it's just a form with the IRS. It has nothing to do with your legal structure. It's just an election you make with the IRS to be taxed as an S Corp. Okay, and you can have, there are rules on who can be a shareholder, but and there can't be more than 100. As soon as you get 100 shareholders, you're going to default to C Corp or back to partnership or whatever. So here, again, you have a separate return. Okay, so it's very similar to a partnership. You're going to have a separate return. It's called the 1120S. It's going to issue a K-1 to your individual with your allocation of income, and then you're going to report your allocation of income on your personal return. So again, the entity itself does not pay tax. However, there is no self-employment tax for an S Corp. Okay, and there is a rule, there is a requirement that your officers, your owners, your shareholders who are actively working in the business have to take a reasonable salary. So that's how the IRS ensures that they're still getting their part of, payroll FICA taxes, but you don't have to pay it on all the income. So let me just make a quick illustration of that. Mm-hmm. So let's say you're a single member, it's just you, and your net profit this year was $100,000, okay? As a sole prop, you're gonna pay self-employment tax on that $100,000, right? Now, let's say you were like, nope, we're gonna make an S Corp election. And your CPA does some research, does their calculations, decides that a reasonable salary for you is $50,000, okay? So you're gonna run a payroll for $50,000. You're gonna get a W-2 for that $50,000. You're gonna pay payroll tax, that's 16% on that $50,000. It's a deduction from your business income. Okay, so now your business income is only $50,000 or less, because now there's taxes and stuff too, right? So that amount, let's say now it's $45,000. Okay, that $45,000 is self-employment tax-free. Okay, so you don't have to pay that additional 16%. So 16% on $50,000 is $8,000. So right there, you've saved yourself $8,000 in taxes. Okay, mm-hmm. So that's why we like to, that's one of the, that is the biggest reason S Corps are so popular, because you save that money right there. And again, just like partnerships and sole props, the distributions, so the extra money you take out, are not taxed unless they're considered an excess distribution. So, all right, that was long, sorry, but I wanted to make sure I was thorough.
No, that was super thorough. So let me just recap to make sure that I understand you properly. Okay, yeah. So the sole proprietorship and the general partnership have the self-employment tax, both of them. They, from a legal standpoint, you are personally liable, or you and your partner are personally liable. So those two things.
Yes.
Legally,
okay.
Yeah.
Okay. So
from a legal, yes.
From a legal, and then accounting. And then from an LLC perspective, you can do LLC, straight LLC, or you can do LLC taxes and S Corp.
Correct.
And then you can do corporation taxes S Corp.
Yes.
And then a C Corp, but you wouldn't want to do a straight C Corp for the most part. It would be circumstances. Yes. You would be talking to your lawyer, like we said, lawyer and CPA. Thank you guys so much for being so detailed, because of the different legal aspects and the accounting aspects, it does make it a little bit confusing. the other question I wanted to ask, because I get that question a lot, if you're wanting to protect yourself, so S Corp sounds like a really good way to go for an accounting standpoint. But Kelly, can you talk about what you have to do, like from an LLC to an S or a corporation, taxes and S Corp? So you have filings that you have to do minutes and those kind of things. So can you explain the differences between that? Because from a time perspective, you also have to make sure that you can do those things properly.
So again, I'll throw out, your state requirements. Look to your Secretary of State website on exactly what those requirements are. But yes, you have to, with entities, whether it's an LLC, LLP, which is another type of entity, or a corp, there are requirements that the state, wants you to do, whether it's an annual report.
Mm-hmm.
LLCs tend to be a little less involved as far as what the state requires annually to maintain your entity status as active. Usually it's a general report, and that's it. Whereas a corporation, will typically require some type of, usually quarterly meetings and some sort of minutes. When I say that it varies so much as far as like minutes can be, a sheet of paper with this much information to, a volume, of minutes. And that'll depend on, are you a corporation with 2 people? Are you a corporation with 200, 2,000, folks? So there are absolutely requirements to keep your entity active. Another, aspect to keep your entity active with the state is if you paid your taxes. So, you got to pay your taxes, and that goes into the bucket as far as what the state considers that you're, active and you're in good standing. Mm-hmm. But the process for getting started as far as an LLC or corporation is usually pretty simple. An LLC, you go to your Secretary of State's website and you file a document called the Articles of Organization. It's one page, super, easy. Same thing with a corporation. All you're filing is articles of corporation, or a for-profit, for-profit corporation is just a tiny little document. Now, that's what's required to become an entity with the state. Mm-hmm. Now, there is a second document that is, in my opinion, the absolute most important document for any entity, and that's your operating agreement. Or for an LLC and LLP, those are it's called an operating agreement. For corporations, it's your corporate bylaws, and that is your Bible as a company. That is what tells you what you can and can't do. Like within LLCs, for example, you've got member managed LLCs and manager managed LLCs, and I'll talk about that for a second, because LLCs, I would assume that's the entity that most people are going to go with. I would assume that most folks would go with an LLC. Most folks would go with an LLC S Corp. That's probably where the majority of people listening to this show podcast will want to end up. There are options within the LLC as far as when you go on your state's website, they're going to ask you, are you going to be member managed or are you going to be manager managed? All of the owners of an LLC are called members. Okay, so just know that. I know a lot of people, they think shareholders. Well, shareholders are corporate. So if you're registering as a corporation, there are shareholders. When you're registering as an LLC, you're a member. So if you are member managed, it means that all of your members, they've got equal opportunity to have say and manage and direct where the company's going. When you have a manager managed LLC, then the members can choose a manager, which can be a member, or it can actually be another company, a management company, another LLC, or another person who's not a member. Okay. So the operating agreement that you would set up, that you would have drafted for you, would outline who is your manager, or who, all of your members. If it's member managed, a lot of times when it's just 2 folks, then they'll do member managed because they both want equal power. But they really want to be able to sign for the company individually and have, full power to sign and bind the company.
Mm-hmm.
So that's really important to have an operating agreement, because then in the operating agreement it can say, again, with Brianna's example, me and Brianna have a company, we're 50-50, but she's in one state, I'm in another. We don't want to have to sign every check. Each of us have to sign a check. Each of us have to sign every contract. So we say we've got full and separate powers that we can each individually bind the company without the other signature. Because if you did not have that agreement and you've got a 2-person LLC, then and you're member managed, then every decision, every contract, every check, everything will have to be signed by all the members.
Okay.
So there are distinctions within that. So once you get past okay, I know I want to do the LLC for the liability, or corporation, then you've got to think how those are structured underneath that to decide which one is best for you. So if you're going the LLC route, just know that those are the difference between member managed and manager managed.
Okay, perfect. Okay, so the biggest thing that I'm taking away from this is that, so Bree and Kelly are very small business centered businesses. So I think that it's really important to say that take your time in researching your CPA and your attorney and make sure that they have a heart for small business owners, like these two ladies do. Because there are a lot of people who are in business and maybe they work with bigger businesses, maybe they work with corporations. And so you go to that person and they don't really work in your space that much. So I definitely recommend getting a couple referrals from other small business owners that you see what their business is doing and it's doing well. And then asking them for referrals and vet these people, make an interview, in-person interview or a Skype interview or Zoom like this, and just really go through and make sure that you're doing your due diligence to pick the proper CPA and the proper attorney for your business. Bree, Kelly, do you have any other advice as far as like picking somebody who can help them? Because I know a lot of small business owners are like, oh, I can't afford to do that, but you're at a point where you really can't afford not to.
Yeah, and to speak to that, first, I would not hire, I don't know, at least not a CPA without meeting with at least 3 of them, you guys, just to kind of see, because again, you don't know what you don't know, and if you talk to 3 of them, and one of them answers it outlandishly compared to the other 2, maybe that means you need to meet with some more because there's more options out there than you know. Mm-hmm. And then, just making sure that they're not only knowledgeable in the area that you need them in,
right, but
that you guys mesh well together. Personality is so important because this is not somebody that you're going to talk to. Hopefully you're not just talking, well, maybe hopefully you're talking to once a month or a year, I don't know, but you need to be able to converse with them and make sure you're on the same level personality wise. So,
and they should never make you feel stupid. That's just
bingo. Yes. I totally spot on.
Yeah.
Kelly, anything?
Yes. Yeah, for sure. Everything that Brianna said. Bedside manners are always important. Just because this is your as a business owner. This is your dream. This is your livelihood. This is your goal for your life. So, you want to make sure that you're protected from a legal and a tax standpoint, but you also want to make sure that you trust who is giving you that advice and that you converse with them well. So, I definitely also recommend interviewing some folks. I know that's tougher in the legal world because a lot of times there are consultation fees. So a lot of attorneys don't do free consultations, and I get that from the perspective that a lot of times people want to just sit down for hours at a time and basically just go ahead and get all of the advice they need and then never have retained you to do it.
Oh, I see that. Right. Well, then I would say, because I think free consultations in CPA world are pretty common, so maybe start there and then see if your CPA has some suggestions. I don't know.
That's exactly what I was going to say.
Sorry.
No. I always tell folks, start with your CPA. When they initially come to me, I do 20-minute free consultations.
Nice.
Personally. But I'm licensed in Tennessee for now, so just so more is coming. But if you are, I always tell folks, I want you to first start off with your CPA or put us all on a phone call together. And I want to know what your CPA suggests for you first. And then let's talk about what your options are within that, right? Because I know enough to know, if your CPA says, yes, you need to be an S Corp, I know that you can be an LLC and a Corp and be an S Corp. So then we can work between those.
Nice.
So maybe like Bree says, that most CPAs do free consultations. Start there.
Okay.
And then take it to your attorney. But I would definitely consult with someone or some sort of, program or, before just winging it.
Okay. Yeah, no. Okay. Thank you guys so much, Bree and Kelly. I really appreciate this. This has been so helpful. And I know that the people listening it's been helpful for them too. So the thing I want to tell everyone who's listening and watching right now is that I have direct links to both Bree and Kelly for freebies that they are offering, but also just information to contact them if you have any questions or need help from a CPA or an attorney. And again, thank you guys for being here. Thank you for listening and watching, and we will talk to you next time.
Great.
Thanks, Bye.
Bye.
I hope that helps, and please click the link below so that you get the resources to help you decide on what entity type is best for you.